What's going on, everyone? Welcome back to our channel. I'm going to show you a GU trade I took on Thursday that I sent out to our signals group. This one's a little bit different than some of the recaps I've done because we were just playing with internal ranges. There's no actual external breaks. So this one, the idea is a little different than what I've usually shown you guys. Make sure you stay to the end and you'll kind of get the gist of why I took it. If you already haven't, definitely subscribe to our channel. So first thing for this trade idea to make any sense, you guys have to understand where our last external range came from. For me, it's always the lowest point that put in the highest point. So just to show you what this looks like on something a little higher time frame, it's very clear. So you can kind of see that all this price action inside these purple lines neither broke the highs or broke the lows, and instead what it actually did is price created a bunch of smaller internal ranges. And what I've found in my own testing is if price keeps playing inside a 1 hour or 4 hour range and there's no external breaks, is price tends to react from the extremes of any leg. So there's no structure of any kind being formed that matters. This is all internal. The only structure you would really see here is on the lower time frame. So if you kind of look at this whole bearish leg, price reacts from the extreme. If you look at this whole bullish leg below, price again reacts from the extreme. So those are both bullish and bearish reactions that can be easily explained. Now let's look at the next leg. You have a bullish leg here. I'm kind of looking to react from the extreme. And if the reaction is valid, the low of the candle or the pivot point's not to be violated. So if I'm kind of looking at these, this one may have not got hit, but regardless of no liquidity being taken, what I'm really looking at here is this high never gets violated, we react from the extreme. This low never gets violated, we react from the extreme. I'm always looking for that last pullback to get taken out. So in this case, that's the first sell range created on the lower time frame. That's lower time frame liquidity. When you're dealing with ranges that aren't breaking in out of the externals, you play the internal extremes. So what that means is anything above here to here would be a sell. Anything above here to here would be a buy. So just to mark this a little clearer, I'm looking at the first pullback at the extreme of every range. If I pair that with my timing, that avoids a lot of unnecessary losses. So now I have a push from this extreme to a push from this extreme. Now you kind of notice what I'm really looking for is any kind of momentum and a push away. So for me, these are all bearish candles. This will be a good reactive area. This here, there's no consistent momentum. This might take more convincing for me to sell off. This here, you have at least 3 bullish candles, so that's my vector candles. This would be a good area for me to buy. Good area to buy, good area to sell. This for me would not be a high quality point to buy off. This for me would not be a high quality point to sell off. This would be a great area to sell off. This would be a great area to buy off. So you can kind of see the ranges I'm looking at taking out is where I have a bunch of bullish candles in a row, a bunch of bearish candles in a row, And ultimately, I'm looking at taking out the first pullback, which is the first lower time frame range. So obviously, we're just going from range to range. That's kind of how you play a liquidity market when there's no immediate direction. So when you're playing this kind of stuff, bullish and bearish really means nothing for you. So I actually have taken no trade up to this point. I come into the market somewhere around here for New York. Now you can see my point of interest got hit here. And ultimately what I'm looking for is any kind of reaction to validate that I am indeed going from zone to zone. For me, we get core PCE. It doesn't show it, but we also get US unemployment, which comes out worse for the States. So now I paired the fundamentals with everything I just showed you guys, and I need a confirmation for me to basically buy or sell. Now this looks like a pretty valid buy. It's in the direction of fundamentals. To ultimately confirm me, I just put a buy stop above here. If price breaks out, my expectation is to continue to the first reactive zone, which I showed you guys. So I could put a buy stop here. The only thing that might happen is, let's say price dips a little lower before it breaks. My point of invalidation would be too large. So then at that point, I would wait for this break to happen and I would just market execute. So for me, I need at least a 2R to get involved. I believe price kind of starts going up here. So for me, I believe, I want to say I covered this low. So it's always the first fractal that prints to me, and then you go a little bit below it, which would be this swing point, you would say. And for me, if price wants to test this and this idea to remain valid, this range will likely hold. If this range doesn't hold, I would wait for a test of this, and I would basically look at this as liquidity. And at that point, I would need price to do something along the lines of creating ranges to the upside, and I'd probably market execute on the fly. So I'm always looking to take liquidity. I'm always looking to break out of the range with momentum. So you just leave the stops open on stuff like this when the run's pretty short. I found, especially with GU, price seems to love to remitigate exactly where you got in, and it's always where the transfer of orders happened. So this is your last set of sell orders. You broke through here, it means the orders transferred here, and this is kind of where prices remitigate. And I find if that's where you get in, you just leave your stops open because these areas just get retested. You can call them peaks and valleys, support and resistance. It'll be whatever. I think it's resistance becomes support. So in their case, this would be a break of retest. But that's kind of where I look at entries to happen. So this one was roughly 2.3R. Very simple trade, very systematic in the direction of fundamentals. Because how short all the trades have been, how small the ranges are, I don't shoot for the moon on these trades. So I keep it very short and sweet. Yeah, that was this day's trades. Make sure you guys check tomorrow's recap as well. I'll show you the long and the short I took that I also sent out to the signals group. And the idea behind them was a bit different. I hope you enjoyed this, guys. Have a great day, and I will see you in the next video.